our IDA members, I'd love to introduce the lovely Beth Hodge, who is joining us. She is a partner at Empire Accountants and has kindly given some time today to talk through JobKeeper, and hopefully it will answer some people's questions. Thank you for those of you who did send in questions, and welcome, Beth.
Thank you. Thanks for having me.
We're very well. I'm very thrilled to have you. So let's get right down to it with the questions. So my first question, I'm a sole trader with an ABM. Am I eligible to apply for JobKeeper?
Yeah, so the short answer is maybe in that sense. So there's a few eligibility criteria that you have to go to. So being a sole trader with an ABN does qualify you for the program, but you have to then satisfy certain tests. So the first one really to look at is your turnover test. So that's where the ATO, or you have to be able to demonstrate to the ATO if they ever asked. So there's no requirement really to send any of this information in. It's more of a self-assessment system, but you do have to do that step of self-assessing and showing that your turnover has reduced by 30% or more. So there has been a lot of this turnover chat, like what is turnover, which can cause quite a bit of complications, but it's basically, they refer to it as GST turnover, which you don't have to be registered for GST to be eligible. So don't worry about that if you're not registered. You can still be eligible. But what GST turnover is by definition is basically sales that you've provided a supply for. So if you think of it is possibly, I'm guessing for most of your members, is that it's service-based income that they would be providing. So as long as they've provided that service in that particular period, then that would count to their GST turnover at that sales figure. So it's not sort of taking out expenses or costs or anything like that. It is that true top line, what we refer to, income, would be your GST turnover. So the decline in 30%, there's a basic test, which if you have been impacted by COVID quite dramatically, you're generally satisfied. So it's sort of, you have to look at, there's a few different test periods, but the first one is, say you look at March 2019, and then you compare that with your sales or your turnover for March 2020. And if that's decreased by 30%, then you would be eligible. In the simple sense of satisfying that turnover test. If you can't satisfy March, because some people were still operational in March, they allow you to look at April and do the same thing. If you can't satisfy April, because it's still sort of not that full 30%, but you know your April might have been fine, but you know there's no work for you in May or June, then you can forecast out and say, well, for that quarter, you've compared the last year, so April, May, June combined, with quarter this year of April, which we now know, a forecast for May and a forecast for June. And if in totality that's less, or that satisfies that 30% decline, then you would satisfy that turnover test. So that's the first point. Then there's a whole heap of other scenarios that kind of come out of that. So I won't go into too much detail, but say if you're a new business or if you've dramatically changed your turnover, so you've grown a lot. So I've got some clients who only just started this time last year and they've done amazing things in a year. So their turnover is substantially different. There are some different tests that can satisfy you through that makes you, as long there's all these qualifying things, the ATO made it the most complex system in the world, but basically in summary, they will allow you to kind of consider, if you can satisfy these other qualifiers, to go, well, I'll compare March this year to April this year, as opposed to having to look to 12 months ago. And then there's a similar test as well if it's a new business. So well, I guess, probably those things. If you're thinking, oh, I haven't been eligible because I'm a new business, or I haven't been eligible because my business is so different than it was last year, there are some options there that would be worth looking into. So that's the turnover test eligibility. The next eligibility is then looking at your business activity, really. So you have to be trading in that sense, like actively trading. So there's some people or some clients that I have that might have dormant businesses that aren't really doing anything, or they're their side business and they'll have a permanent job. And whilst they might have lost their permanent job, if their business wasn't actively trading or they've just been stood down from their permanent job, then that disqualifies them from JobKeeper.
Wow. Okay.
So that's another thing you've got to be mindful of. If you have that arrangement that you have running, like you're running your business and you've got a job, so where you might be doing both, so that can be okay as long as that second job situation is casual. So if that second job where you might be employed is a permanent placement, then that will disqualify you from JobKeeper. So that's another thing to be mindful of. The other requirements, I did write this, I printed out the thing, is your residency. That's an important one to be mindful of as well. So you either had to be obviously Australian citizen, resident, or on a subclass 444 special category visa holder, which I don't really know what that means. It's more, but if you are here on a visa, just make sure that you satisfy whatever that visa holder. So it's not available to, even though you'll be an Australian resident for tax purposes on a particular, and you're allowed to work here, you might be disqualified because you don't hold that right visa as well. So that's another thing that can disqualify you, I guess, or make you ineligible. If you get paid parental leave, or like a dad and partner pay can make you ineligible because effectively they're paying that to you anyway. And then, or if you're on work cover payments, that can make you ineligible, or if you're running under someone else's JobKeeper. So that's again probably going to that scenario where you've got a couple of sources of income. So if you might have a casual job and it might have been long-term casual, and they've said we're going to run you on our JobKeeper scheme, which is fantastic. So you then can't obviously apply for
double dip.
Double dip, So that's something to be mindful of with the eligibility, I guess, as well as you might be eligible now, but if circumstances change, then you have to remember to notify the ATO so you don't get overpaid in that instance if you ended up picking up work that was permanent or something like that changed it, that you can get it for part of the time, maybe not all of the time. The best place there is, and I sent you that link, so possibly
I've got that link and I'll share it with members as part of
to have a read through of that. And so because to apply as a sole trader on an ABN, you do it through your MyGov. And in that, when you go to apply, they'll explain all this to you there as well, because I know it's quite a bit to take in. So it is a matter of just stepping through and saying, yes, do I, satisfy all those sort of requirements? Yes, I do, so I'm okay, or no, that disqualifies me, so then I wouldn't be eligible. It's probably a good first step.
Okay. Excellent. So, and then obviously the counterpart to that, and I am a company, am I eligible for JobKeeper?
Yeah, so those rules work in a very similar way for companies. So the difference is with companies is, so as a sole trader, like you are the business and it's all legally the one thing. As a company, that's where you'll have a different entity that you operate through, and that company will either pay you wages for the work that you do, or come end of the year, you'll go see your accountant, and the accountant will do some fancy tax things and then suddenly sort everything out for you and be like, here's a bill. Is probably one of the two scenarios. So if you've got scenario A, where you actually do pay yourself as an employee as a company, that's where you'll follow that JobKeeper process and be registered as an employee of that company. So it's important, again, that turnover test still applies, so that's exactly the same, the 30% decline. Again, all those eligibility criteria apply to employees, but if you are an employee, one of the extra requirements of you classifying yourself that way, or having to classify yourself that way, is that you have to demonstrate the $1,500 payment that you receive is passed on to you. So again, this is sort of, it's a bit of a technicality in some instances, because your employee is yourself, but that again, the letter of the law, you have to demonstrate that you pay out that $1,500 to get reimbursed. Whereas if you're a sole trader, or I'll talk about this next one, you don't have to demonstrate that. So that's a bit of a change. If you're company ABN and you don't pay yourself as an employee, you then have the ability, but you can satisfy all the other requirements. You then have the ability to nominate yourself through your company application as what they call an eligible business participant. So each company is allowed to nominate one person as an eligible business participant, has to have all that same eligibility criteria, but that then, it's basically the same payment though. So it's just a different language for that person, because the money then gets paid to the company, of which then you would then pay yourself, or there isn't that obligation, I guess, to pass it on to you as the individual in that instance. But most people, because they need the $750 a week as well.
Absolutely. And in terms of satisfying the eligibility requirements, a couple of things that we already talked about were what you have to have submitted as a company to be eligible.
Correct. Yeah. So that's a good point. So one of the deadline dates are important in the sense. So when they wrote the legislation, they said that to be eligible, you should have lodged either your tax return for the company or your individual, depending on which level you're applying for.
That's the year before, the 18-19.
Yeah, the 18-19 return should have been lodged by the 12th of March, or that if you're registered for GST, you would have lodged a business activity statement dated from like the 1st of July 2018 quarter through till now, pretty much before the 12th of March. So if you register for GST and you're pretty up to date with the obligations, that one's not a big worry. But if you're not registered for GST and then you haven't done your tax return from last year because your tax agent, the due date wasn't yet, so you were waiting, which you were allowed to do, that can cause a bit of an issue. So the ATO haven't come out and given any formal guidance on that. The only sort of comment that is on their website says, we understand that if you are lodging through an agent, which gives you an extended due date, so our normal due date is 15th of May for tax returns, which they've now extended even till the 5th of June. So they're saying if you are under the tax agent's lodgement program already, so you already had an extended due date, that it's okay that you can go and still apply when they manually, it'll get caught, so then they'll have to manually assess it, but they'll see, okay, well, you have that extended due date, so it's okay. If you were lodging it yourself, which then you have your 31st of October due date, and you just didn't get around to doing it, that might be a disqualifying factor as well. Yeah, that's where you'd have to call the ATO and, ask really nicely, I guess.
Pretty please.
Something like that, So, that's a good point to make, about the date.
Okay, and so in terms of, sorry.
No, it can probably get some people unstuck. So it is in terms of lodging. So if you've been really slack though with lodging tax returns over the last few years, then that will get you unstuck. Even if you had no tax to pay, so you were not too worried about lodging, that you've got multiple years outstanding, I think they're just saying, well, no, you haven't been a good taxpayer, or you haven't kept up your obligation, so we're not going to extend it.
Okay. Let's hope nobody's come unstuck in that area then. So in terms of the amounts that people are eligible for, am I right in that it's $1,500 a fortnight?
Yeah, so JobKeeper's a one payment, one amount payment. So they're saying $1,500 a fortnight, but you can, if you talk in weeks, then it's $750 a week. If you used a month, then it's $3,000 a month is generally the sort of, but it will be a $1,500 a week payment if you're eligible. So for some people, it is working out that it's more than they've ever earned from their sole trader businesses too, in particular. So, but that doesn't.
I'm one of those people. So yes. Secret squirrel.
It's quite common. I've had a few clients be like, I've never been better.
Well, as long as you're making the most of it in a business sense. And how long are the payments set to last for?
So at the moment, the sort of process you've got to go through is you've got to assess your eligibility. So the payments started being assessed from 30th of March 2020, which they said will go through to like 27th of September. So that should be 6 months. So that's about 6 months worth of payments. So
Okay.
the process is that you have to then do that first assessment piece to say, when do I start on this JobKeeper program? Is it from the start, which is basically what we're calling April payments? Or is it, I was okay in April, but it's going to be May, or is it June, or is it July? So you can enter this whenever you qualify. And so let's say you enter the scheme now, they keep saying you only have to test once. So you only have to test it once that you satisfy that turnover test, but you have to keep checking your eligibility in the sense of those sort of personal or individual exclusions. But so you test once, you apply. What they're saying is you will just stay on that scheme for the 6 months. So you test once, you apply through the ATO. There's like 3 steps which you have to keep filling out forms with the ATO. I swear they just started being, oh, we wanted to collect this data, do another form.
Oh, right, okay.
Yeah,
we love forms.
Yeah, so that's, yeah, I know, very repetitive. But that's, once you enter the system, the understanding is those payments will flow until, and each month you've got to do a declaration to say this is what my actual turnover was for the previous month, and this is what I think my turnover is for now. That's apparently just data collection. It's not a retest.
Okay.
But it's just to be, because a lot of my clients are starting to freak out and being like, oh, it wasn't as low as what I thought. And I'm like, well, you've just got to tell the truth.
Yeah.
And the ATO keeps saying that it's not sort of a retest.
Well, if there's a surplus, just pay it back to the ATO.
Exactly. Like, there is this tiny little clause in the legislation that says something like, at any point, the government has the power to change this. So that's where I've just been saying to clients, look, as it stands now, it says 6 months, but I wouldn't be surprised if, I don't know, if everything's going, fantastically, if they ended up cutting, I don't know. I feel like if they cut it short, they might lose both. But if they, I don't know. So it's not like, it's like 98% sure it would last the whole time. But just be mindful, you can enter it later, because I've got a few clients who are fine now, like they might have had jobs that were that they were working on, that they're still, their clients aren't impacted, whatever it is, but then they lose their lead funnel. So they've lost that ability to win the work that would normally be coming in for July or August, is where they're actually going to be impacted. So even if you're not eligible now, just remember to keep checking, because you can always enter later, which they might give you a few months, but it's better than nothing to allow you the time to rebuild the work. Yeah.
And even if you enter it sort of later, do you get paid retrospectively, or is it only from the time you... Right. Okay.
Correct. Yeah. So only right at this moment is when they'll allow us to go back to the start, and that deadline finishes on the 31st of May.
Right.
So you've still got until the 31st of May to decide if you thought you were eligible for April, and they'll back pay to April. But from basically this month, from June, I think the dates aren't exactly out yet, but it's pretty much, okay, well, I'm applying now, so I'm eligible now. That you won't be able to go back.
Well, I suppose, in the scheme of things, it's better to apply now anyway.
Yeah, if you tick all those boxes, you might as well, if you're eligible.
Exactly.
Because that's what the scheme's there for.
Yeah, well, that's it. And like you say, you don't know what you might be pitching for now that doesn't come through. So the world of working for yourself, it is glorious and sometimes tricky. And in terms of getting JobKeeper, is there any sort of extraneous taxation around that, or how will the tax work on that?
So JobKeeper is a taxable payment, so it does count in your taxable income. So that $750 is, or the $1,500 a fortnight is what they're saying. You'll see it advertised before tax.
Sure.
So they will give you all that money, and then it's up to you to keep aside the bit that you will need to pay tax on when you prepare your tax return for that year. So, and that bit will depend on what taxable income that you're sitting at and what structure you're kind of operating through. So it's not sort of a flat rate of saying it's, a few $100s or something. It really comes down to just adding on to your normal income that you'd earn. So, and then, trying to keep making sure making sure you keep some aside because you will have to pay tax on it, so you don't necessarily just want to spend it all.
Yeah. Well, if you do, I mean, I've just done a quick calculation then. If you were only receiving JobKeeper, your salary would be 39,000. Is that still below the threshold of the next tax bracket?
Well, because it's going to span over 2 tax years though.
Oh, I see. Right.
Yeah, so it's sort of, so you'll have about 18 grand possibly this year.
Right.
And then 18 grand into next year. So it kind of depends what activity you've done from July last year through to now, taking that number and then adding the 18,000 on top if you got it all.
Right. Okay.
And then there's the website, the quickest website I've ever used is taxcalc.com.au. If you plug that number in, it'll give you an idea of what that total tax is. But if you've been paying like installments and stuff like that, it can kind of
and that's a good
it's
good
not
practice.
as easy, it's not as straightforward as that, but that
it
is sort of, just think of it, it's like adding to normal business income. Instead of a client paying you $750 a week, the ATO is paying you $750 a week. So just follow that same principle with whatever sort
when
of
you're paying your installments. And if anyone's already not doing that, I say get it set up. So
exactly. It'll save a lot of emotional heartache of having to let go of money.
Absolutely.
Let go of my tax money, and I know it's coming the entire time.
And so again, and how do I apply for JobKeeper? Say if I just do it myself, or can I get my accountant to do it?
Yeah, so normally you can do it yourself, and there are some really good. The ATO has published some really good guides to step you through it. So
I've got a link. I've got a link here that I'll share. That
so they are really good. They take you through it step by step. So you can apply it by yourself. If you're a sole trader, you can do it straight through your MyGov platform. There'll be like a JobKeeper enroll. If you're got a structure like a company or a trust that you have to apply for, then you have to go through this other process, which is getting a MyGov ID and linking that to the business portal. So if you've got that second one, it's a bit more complex, but I've got a client, I reckon she'd be in her late 60s and she worked it out. So I'm like, if she can work it out, anybody can.
Well, look, I know that there's definitely some technophobes amongst us. So
so don't be scared. She sat down, she worked it out, she got there. So I was like, so if it is that sort of scenario though, I guess, where you just don't feel comfortable or you want to get that second opinion, then your accountants can do it for you. I know like we're charging for that service though, so don't be surprised if accountants want to charge you for it, because there is quite a bit of it's a bit that there's like we have to go through that whole eligibility assessment because where they're making that declaration that you're eligible, so there's a bit of work and compliance in it. So but for most of my sole traders, I think I've done one of them. The rest of them, I'm like, here's the link. I think you can do this yourself and save you the money. Really, is what I've said to them, and they all kind of worked it out.
Cool. Yeah. And another thing I noticed, sort of obviously, researching all of this, is that actually quite a lot of the banks have set up a hotline for their customers to contact them with questions and that. So I've sort of gone down that path myself. That's it's another opportunity to actually speak to someone if hiring your accountant to do it, or doing it yourself is a bit tricky.
The ATO will help as well. It just takes a while to get through to them.
Well, so that's what I mean. You've probably got a better chance of getting onto your bank. As an alternative.
So there are some. There's none. I couldn't find any in Queensland, but I think there's some like even business hotlines. I was trying to find
I've seen a few as well. I mean, I guess the ones that I have seen generally have linked to the ATO. So And another thing I found, which you may or may not have come across already, is because businesses have work cover policies, how does the JobKeeper impact on that as well?
Look, I got an email about that yesterday. and I haven't read it, to be honest, so I'm not sure.
No, that's cool. Okay,
Yeah.
I'm trying not to. I'm not trying to put you on the spot with this one, because I have got a link. I've got a link for that as well.
Yeah.
So I'll be more
I
than
know
happy
that I was
to.
just thinking, I did read, payroll tax. It's not counting payroll tax, but I don't think anyone in this group would have payroll tax issues.
No. Not unless you've got what is it? If you've got a combined salaries of over, is it 100,000?
Mil. Yeah.
Oh, it's millions. Oh,
millions.
You know, sadly,
that's what I was just thinking.
Sadly,
I'm like, did I read that? Payroll tax, work cover one. And
sadly,
I think work cover is a similar thing, but it's best just go straight to what we don't give a lot of work cover advice. Our advice is to go talk to work cover. But I know they have. You're right. They have put a release out about how that's treated. Yeah.
Okay. Cool. Excellent. All right. Well, that wraps up my questions. Is there any sort of were there any snippets? I mean, do you have any sort of a quick business case that might be useful? I mean, you have spoken about people who haven't put in the last few years tax.
Yeah, I haven't got any of those to know. Right. The only one I sort of tackled this week was that scenario where if they hadn't done this year's tax return and then not the GST, and that was the ATO gave us one answer, and I'm like, that's not right. So I got the girls to call back, and they gave us the one that, so that's probably that one. Your deadline dates are probably an important one sort of takeaway to try. And if you have employees, so in that instance where you actually employ other people, and you want to, because we haven't really touched on this, so if it's that scenario where we're not just talking about yourself, we're talking about actual other employees, there's more eligibility assessment around them. Probably the most important thing is whether or not they had to be like permanent, in the sense that either they have to be full-time, permanent, part-time, or a long-term casual. So if they satisfy that eligibility requirement, they have to be over 16, and then there's a couple of other new rules that they brought in around if they were 16 to 18. There's some limitations around those, but I haven't got any of those clients, so I haven't looked into it.
No, fair enough. Another thing I just thought of just then is, I know that we do have, I know that we've got maybe one or two members that are a business. So what if there's sort of two people who are like,
together?
Two directors, if you will.
Yeah, so say if they were in a company, two directors, they were employees, and they processed through that employee part, then they could apply in both two employees. They could apply as two employees. If they were or if they were in a partnership, or they were two directors that just paid themselves through dividends or through the account doing the fancy thing at the end of the year, only one of those would be eligible.
Wow.
So for the company level, so it's sort of like the company, and then I think like they would get it effectively. So that's where is a bit of that limiting factor. And I think they were trying to capture it's sort of that mum and dad business, but it's like, well, I've got a lot that, they're friends in partnership, so they kind of have to make a decision around which ones going to get it, but most of them have just halved it, really. So
that's good to know.
So, but if you have employees, the important thing is that there is like this one in all in principle that they talk about. So you have to assess it at the qualifying date of 1st of March. So if you have employees and they're long-term casuals or they're permanents, and you pay them less than the $1,500 a fortnight, but they're eligible, and you want to apply for the JobKeeper scheme because you want to get it for yourself, or you want to get it for one employee that might be over, you have to be able to get it for anybody, you have to top up everybody's pay to that $1,500 fortnight from your own salary. So that's where the banks are coming in to help. So that's why they're doing a lot of promotion around it, because they're saying we'll use some like a mini overdraft basically to allow you to have the money, because the government will give that money back to you, so you're not out of pocket, but
in the meantime,
which is hurts the small business. So that's a really important issue that's been ongoing that they've given us further clarity about that is, I can see why they've done it, but also it's not great for, especially if you're quite small and you have a few casuals that you run and you might pay them each $300 for you to qualify everybody. You've suddenly got to more than double their income. You know,
and then they might get used to that.
Exactly. And then there's a whole heap of fair work issues around that because people are, clients are doing that, I guess, and then, or businesses are doing that, and they're asking those people to work more, and they're like, but I don't want to work more. And so there's a bit of this employee versus employer issue going on out there.
That's hard.
You can see it from both sides, so it's sort
absolutely.
Yeah.
Well, in that case, definitely go and check out Fair Work Australia as well.
Yeah, so there's a few different bodies. If you, depending on the scenarios that you're looking at, like, but definitely if you've got employees that are not yourself, then that work cover one's a really good thing to consider, and then also Fair Work and what your obligations are around paying them. Because that's the other thing, people started coming out and being like, oh well, I usually pay them $1,000, but I'll take it down to $750, but they still have to do their same job. And then they're like, no, you can't, you can't do that. You can take them down, but they also have to reduce their hours.
So, okay. Well, I think, reduced hours are kind of quite common at the moment anyway. So
they're definitely. But the ATO's guides are actually pretty good, which I wasn't expecting.
Well, at this point in time, we don't want to slam the government because they've actually done quite a good job. And in such a short time to pull this together. We'll forgive the MyGov crash. Was that last month, wasn't it? Yeah.
Well, they changed the system. That's where I feel for them. Like they changed their whole portal systems, and then coronavirus hit at the same time, and they'd already decommissioned the old one, so they couldn't revert.
I have a friend who works at Centrelink, so I've heard all about it from the the cold face, if you will. So it's difficult for everybody.
Yeah.
Awesome. Well, look, I won't keep you any longer, Beth. Thank you so much. We really appreciate you taking this time to help us out, and I will obviously include all your details when I send out the video. So, if anybody would like to get in touch and maybe get a quote on getting some help moving through some of that stuff, that would be lovely. In case I haven't extrapolated enough, Empire accountants are actually the IDA's accountants. So, yes. Cool. All right. Well, again, thank you so much, and have a wonderful day.
Yeah, you too.
All right. Happy Friday to everybody, should I say?
Yeah, you too.
All right. Take care.
Cheers.